A lot of people dream of retiring early by living off of dividends. But here's the truth. Unless you do one critical thing, that dream probably won't become a reality. In fact, I'm going to show you why just owning dividend stocks probably isn't enough. But then I'm going to show you how I've used an option strategy to speed up my retirement time frame. And as usual, I'm going to do this using my real life trades. I'm going to show you how you can use this strategy using two of the positions I'm in right now. One of them is in Bank OZK, as you can see on the screen, and the other is in Realty Income. I love dividends as much as anyone, and I want to live off dividends as soon as possible. And if you pick the right companies, dividends can be a powerful portion of the early retirement equation. For example, here's the dividend history of Bank OZK, ticker symbol OZK. And notice that going way back in time, as early as 1999, these have just consistently been paid out to its owners, that's you and I. And notice what's happened recently. The amount of dividends have really been going up at a nice pace. And here we see the same thing with another one of my favorite stocks I trade in, which is Realty Income, ticker symbol O. And it's a monthly dividend paying stock. Notice that it too has paid consistently growing dividends. This screenshot goes all the way back to 1994. And just notice that consistently over time, it's really growing its dividends at a nice sustainable pace. And for both these companies, notice the consistency grade of its dividend is an A. So overall, I'm going to share with you two really good, consistent dividend paying stocks that just fall short if you're just trying to retire on dividends. And these are two that actually have a higher dividend right now. But I'm going to show you how you can use this simple trick to retire early using these companies. So let's break this down for you. So here's where I asked Google, how large of a stock portfolio does the average person need to retire? And to save you a bunch of reading, you see that it simply replied $1.26 million. So for the sake of this video, I'm going to work on that formula. I'm going to run numbers based on a $1.26 million stock portfolio. The challenge with that number is that a lot of people probably will never get there. I mean, it's difficult to save that much money. But I'm here to tell you that just because you don't have that much money, it does not mean you can't retire or even retire early. And I'm going to show you how to do that in this video. I want to make this video as simple as possible. So what I'm going to do is I'm going to build a portfolio of just these two stocks. Now there's no way on earth that I would ever retire with a large portfolio of just these two stocks. I'm going to get to my position sizing a little bit later in the video. But just to keep it very simple, I'm going to say that we're going to have a portfolio of 1.26 million in stocks that yield about the same dividend that these two combined companies yield. Here you see that Bank OZK is currently paying about a 3.37% dividend. And Realty Income is paying about a 5.35% dividend. So if we do the math and average those two dividend yields, they're yielding about a 4.36% dividend combined. If we do the math, we take that $1.26 million portfolio and multiply the average 4.36% dividend, then this portfolio will pay us right at $54,936 a year in dividends. Now, can you retire on that? Some of you might be able to, but most probably can't, especially if you have any kind of bills. So how can we greatly increase the amount of income we get from our $1.26 million portfolio? Or even more important, how do we take that $1.26 million and shrink it way down so we can retire a lot earlier than we thought possible with a lot smaller portfolio? Now, some people will say, well, I'll just use these really high yield ETF funds. And there are a lot of them out there. Everybody's talking about them. Whereas I'd be willing to put a little bit of money in those high yield ETF funds, I like to see how they perform during a market crash like 2022 or 2008. Because if you're putting all your retirement money, all the money you have set aside to live on for the rest of your life, I don't want to risk that. I want to have it as safe as possible. So whereas I'd be okay putting some money in those high yield ETFs, I don't want most of it. I don't even want half of it. I don't even want a quarter of it. But in spite of that, we can still retire early, and here's how. Let me talk you through the trades I've done in these two ticker symbols, Bank OZK and Realty Income. We're going to talk through the income I've generated by using covered calls, and then you can decide, you can let me know if you think this is a strategy that will help you retire early. So we're looking at the actual trades in my small account. This is my smaller retirement account. So going quite a few months back, on January 11th, you see I was assigned a put option. As a result, I bought 100 shares of Realty Income for $55 per share. I remember that Realty Income is a monthly dividend paying stock, so since that time, I've been getting that monthly dividend from Realty Income. And I had to buy it right about in here in January. So all these months, I've been receiving that nice monthly dividend of 27 cents per share. But I've been juicing that up doing something else. And that something else is selling covered calls against this stock. But Realty Income, I did it with a twist, as you're gonna see in just a minute. So on January 11th, I bought 100 shares at $55 per share. And notice what I did on the 13th. So several days later, I sold the March 21st $55 covered call option. And for that, I got 60 cents per share. Now remember that monthly dividend was how much? It was 27 cents per share. So I've almost tripled the monthly dividend by this one covered call. That covered call was just over 2 months out. Well, fast forward about that 2 months. As you see here on March the 18th, I rolled that covered call. I bought to close the March 21st $55 covered call, and notice what I did. Because I felt bullish on Realty Income, and personally, I believe it's undervalued. I think it was back then. I think it still is. So because of that, I wanted to benefit from possible stock price appreciation. So in order to do that, I rolled my covered call from $55 up to $57.50. You see, just because you sell covered calls doesn't mean you can't benefit from stock price appreciation, and that's what I was hoping to do here. But I also want to collect some more money for selling this covered call. Now, I didn't get much. I really can't buy almost anything of this, but I did get 2 pennies. But again, notice what I did. I gave myself the benefit of $2.50 in stock price appreciation if Realty Income continued to go up. And really, percentage-wise, that was a pretty big jump. If you do the math, the $2.50 that I'd receive and benefit from stock price appreciation based on the $55 strike price, that'd be a benefit of about 4.5%. If it did that in those 3 months, between March and June when I sold the higher $57.50 covered call, that annualized return would be really crazy. In fact, just by stock price appreciation, it'd be an 18% annualized return. It's now March 18th, and I've now sold the June 20th $57.50 covered call. So that covered call expires in about 3 months. Now we fast forward to June 20th, and notice what's happened here. I bought that June 20th $57.50 covered call back to close it out, and I sold the same strike price, but the July 18th, so the next month's covered call at that $57.50 covered call strike price. And for that this time, I got a nice credit of 80 cents per share. So I'm trying to do that math in my head. That's over 3 times the monthly dividend. Remember, the monthly dividend was 27 cents per share. If we're just going 1 month out, I got 80 cents per share. I mean, that's an awesome return. And I still have that benefit if Realty Income is called away from me at $57.50 per share. Because remember, I bought the stock back here at $55 per share. Now fast forward to July 14th, which was about 2 months ago, and notice what I did again. At this time, I still believed that Realty Income was undervalued. And I believed it looked kind of bullish, like it might continue to go up. So I rolled my $57.50 covered call strike price up to $60. So you see, I bought the July 18th $57.50 covered call, and I sold the September 19th $60 covered call. And I got a little better credit than I did down here. For that 2 cents, I got 17 cents per share. But again, I get $2.50 worth of stock price appreciation if Realty Income continues to go up. And as you see here, and as of right now, the market is open, it's trading for right at that short $60 covered call strike price. So if it were called away from me at $60 per share, I would have pocketed all those monthly dividends, as well as all that covered call premium, and an additional $5 per share because I bought the stock at $55. Now, this is a way you can retire early. You're not just limiting yourself to covered call premium and dividends. As you've seen, we're actually lining ourselves up for stock price appreciation. But just so you know this isn't a fluke and it's something you actually can do, let me show you another position I'm still in right now, and that's with Bank OZK, ticker symbol OZK. And it too is in my smaller account. So the history doesn't go quite as far back. This goes back to March, which is about half a year ago. So on March 21st, I was assigned $50 per share of OZK based on some put options I've been selling. Well, several days later, I sold the August 15th $50 covered call. And for that, I got nice premium. I got $1.95 per share. So here's the history of Bank OZK's dividends. And they don't pay monthly dividends like Realty Income, but they do pay quarterly dividends, and they're very consistent with it. Matter of fact, here you see their consistency grade of an A+. So a very consistent, higher dividend paying company. So we were assigned that stock back here in March. I can't remember if I bought it before the ex-dividend date or not, but if we did, then we got this dividend of 43 cents per share, then the one in July of 44 cents per share. But in addition to that, I got $1.95 per share for that covered call. So that covered call expired in about 5 months into the future. If I do the math here of $1.95 per share that we received for that covered call, divided by the 5 months I could potentially be in that trade, it basically paid me an additional 39-cent per share dividend. Well, what happened? Fast forward to August 11th, and I decided to stick with the position, so I simply rolled that $50 per share covered call out by buying the August covered call at the $50 strike price and selling the November $50 strike price covered call. So I rolled it out by 3 months, and notice how much I received. Another $2.15 per share. That's right at 70 cents per month for this covered call. So if you take that 70 cents per share I received that 3-month covered call, and the approximate 14 cents per share that I receive for dividends every month, I got 84 cents per share per month for these 3 months. Now let's take what we've discussed and turn it into a big portfolio. How much can I make with a $1.26 million portfolio based on the similar trades I just shared with you? So let's do some math here. If we had a $1.26 million portfolio, remember we bought Realty Income at $55 per share, we bought Bank OZK at $50 per share. So it costs us about $105 for each share that we owned. So how many shares could we have of each company? Well, it'd be about $12,000 in shares. Now let's review where we're at. If we had a portfolio of stocks that are similar to Bank OZK and Realty Income, how much income would we have collected if we had a $1.26 million portfolio using these companies, using the covered call strategy? So we did that, we'd have 12,000 shares of each. You see our portfolio size would be $1.26 million. Realty Income would have paid us a lot of dividends. It would have paid us $22,680 in dividends. Now we bought Bank OZK in March, but I wasn't sure if we owned it before the ex-dividend date that month because it wasn't paid out until the middle of April. So I just assumed that we didn't. If we did receive that dividend, then this number is doubled. We would have received over $10,000 in dividends from Bank OZK. But I'm going to go safe here. I'm going to say we only received one dividend. So we received $5,200 in dividends from Bank OZK. Now our covered call premium in Realty Income was right at $19,000. But remember the kicker there? Remember we raised our covered call strike price by $5. So if it's called away from us at that higher strike price of $60 per share, we receive a lot of benefit. In fact, I've done the math for you here. For the 12,000 shares that we own, we'd receive a $60,000 benefit in stock price appreciation. So that kind of offsets some of that lower covered call premium. But notice that the premium we receive from covered calls, in spite of rolling it way up in price, it's about equivalent to what the dividends were that we collected. Now I get to Bank OZK. Notice how much covered call premium we would have collected in Bank OZK. We collected over $46,000 in covered call premium during just the short time frame that we owned it. That's from March to September. So in all, the total cash benefit we would have received would have been $95,000. And we haven't been in these positions that long. For Bank OZK, we entered it in March. So today is September 19th. That's only about 6 months. And Realty Income was 2 more months, so about 8 months. But in spite of that, would have already received $95,000 in premium and be lined up to receive $60,000 more in stock price appreciation if Realty Income is called away from us at $60 per share. Here's a couple thoughts to consider when you're trying to decide if you want to do covered calls against the dividend stocks that you own. Some people say covered calls are risky, but in my opinion, they're not risky at all, especially if you're okay selling the stock at the price the covered calls you're selling. Actually, to me, they're a perfect addition to a dividend paying portfolio. And if you're trading them in a retirement account, then all that premium, all that profit is yours tax-free. In fact, in my opinion, as you've seen here, selling covered calls and consistent dividend-paying stocks is a great way to generate tremendous amounts of cash flow and return on your account. And in doing it in an asset that you're already planning on holding. So you're not increasing any risk at all. The only thing you're giving up is if the stock were to go past your covered call strike price and you didn't do anything about it. So you are giving up some potential upside if the stock goes past your covered call strike price. But as you saw with Realty Income, if it doesn't do it fast, then generally you can adjust the position so you can line yourself up to benefit from that appreciation. And here you see an example of what you can do whenever you think a stock's going to go up in price and you want to benefit from it. With Bank OZK, I didn't think it was really primed to go way up in price. So I have just continued to sell that $50 covered call strike price. However, with Realty Income, I've been noticing some strength, and so I want to try to line myself up to benefit from stock price appreciation, so I've rolled my covered call strike price up. In fact, as you see here, I did it here back in March, then also again in July. So that's the nice thing about doing it yourself, is that you're in total control of how you adjust your covered call strike prices. I know for some of you, a $1.26 million portfolio just isn't possible, but just do the math. If you can do half that, around $630,000, we cut this in half, and that's still a tremendous amount of income over just a portion of the year. If you cut that in half, that'd be about $47,000. So that's still a tremendous amount of income, even in a small portfolio. Why don't we cut it in half again? Let's say we only have a $315,000 portfolio. That still would have paid you over $23,000 over the past 5 to 6 months. So can you retire early on just dividends? Well, probably not, unless you're taking on some big risk. But by doing a little twist with these covered calls, you see, even with a smaller portfolio, you can retire, and you actually probably can retire early. Dividends give you that nice, solid base, and then covered calls multiply that income based on that same stock that you already own. Together, they can give you a real plan to retire, or hopefully to retire early. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. If you like the idea of collecting extra premium by selling covered calls, but you're not sure which stocks you should use for that strategy, check out the video at the link above and the description below entitled The Best Stocks for the Wheel Strategy. Until next time, happy investing, and we'll see you again soon.